Hello, and welcome back to the Wealth Management Invest podcast. I'm your host, David Bodamer, part of the editorial team with wealthmanagement.com. For this episode, I'm excited to bring on Kristen Mirabella, who is the head of partnerships with Eaglebrook Advisors. Kristen, welcome to the podcast.
Hi, thank you so much for having me.
So if you could just take a minute to talk a bit about what Eaglebrook does and your role there, that could help situate our conversation.
Sure, happy to. Eaglebrook is a crypto investment platform built for financial advisors. We allow direct investment into crypto on your client's behalf. So we are one of the largest SMA platforms for digital assets that you'll find, giving you the ability to manage a crypto portfolio for your clients and obviously reap the benefits of everything direct investment for cryptocurrency there is to offer. We support direct investment of a variety of coins, whether it's on Gemini, one of our qualified custodians who we work with, or Anchorage Digital, another one of our qualified custodians. So you really have the ability to dive in, access a variety of coins, and hopefully be able to answer to client demand. A little bit about myself. I have been with Eaglebrook for over a year now. I had the pleasure of working with Eaglebrook for about 4 years before I joined. They were my client. I was at Gemini Trust Company, the aforementioned custodian, before joining Eaglebrook. And I managed a group of intermediaries with a deeper background in wealth and asset management, starting at Goldman Sachs, working at hedge funds and law firms in between. I finally learned about cryptocurrency at a point when I felt transparency was so badly needed in certain asset classes, and certainly in some of the operational realms of what we think about when it comes to working in wealth and asset management. So I really got the bug. Being in crypto for about 7 years now, with that background, it's always been obvious to me that there needs to be better and safer ways for financial advisors to include digital assets in their client portfolios. So I've always been fascinated by the technology that the Eaglebrook team built. I'd always understood, especially with them as my client, that they were going about building in the best way that I would have identified at this time in digital assets. Compliance first mindset, working with regulated partners, and of course being SEC regulated ourselves, it really set the stage for being able to provide something like crypto SMAs to advisors and helping them understand the wider array of what would be available to them as this space continues to unfold and we see an increase in institutional adoption. So I'm really happy to be here and really excited to share what we offer with advisors tuning in.
So start with like a pretty basic question. When you talk about an SMA that's got crypto in it, how does that actually work?
The way it works is, and I mentioned this a moment ago, we are a technology platform. So you're interacting with Eaglebrook like a marketplace. The same way you would interact with iCapital for alts, you would log into an Eaglebrook and you'd have the ability to onboard your clients directly. You'd have the ability to choose what type of strategy they're going to be invested in. And what happens is you're either able to invest via cash or you can transfer assets in kind, which we can talk in more depth to. And then you have the ability to manage a customized portfolio, choosing a variety of coins available on either respective custodian, or you can also choose a third-party manager, ARK Invest, Franklin Templeton, Exos, Bitwise, for a model portfolio, similarly to how you would choose a model portfolio by any other asset manager when considering SMAs. So it allows the custodian to hold these assets in your client's name in a segregated account, which is unique.
Just my caveat here is I've not really talked about crypto very much. So some of my questions are a little clumsy. Please excuse that. But is there like a vetted list of approved crypto assets, or like you said, it's like you can kind of look at some of these different managers or different custodians, see what options that they have, and that's how you kind of can pick and choose what you might want to allocate to?
That's right. So say you're trying to build a custom portfolio, number one. You want to know, what are my choices? If my client says they already have Solana, they have Bitcoin and Ethereum, how do I, move this over and manage it myself? Are these three available? What are my choices? We have lists. So what you would do is say either use a wire, or if your client has an existing account for crypto on a held away basis, say at Coinbase,
Mm.
crypto.com, Robinhood, they can transfer that balance over. And the list of what you're able to invest in on their behalf would be the same as the list you're seeing at, say, a Gemini or Anchorage. So when an advisor is considering what type of tokens or coins they can include when building a portfolio for their clients, their options would be the coins and tokens available on either respective custodian we work with, so either Gemini or Anchorage. And when we think about the availability of assets on either platform, remember, these platforms are regulated. So first and foremost, they're not allowed to wake up and say, hey, here are a ton of new coins that just got listed on the internet. Nobody knows what they are, but let's throw them against the wall and see what happens. There is a vetting process on each platform, and that vetting process has been approved by each of their respective regulators. So for Gemini Trust Company, it would be the New York Department of Financial Services, and for Anchorage Digital, it would be the state in which they're regulated as a bank. So these processes would indicate, whether or not these assets are deemed securities, whether or not they pass certain tests and viability for trading, obviously certain scans to make sure these are not complete scam coins. So the availability list, you'll notice, does include the majority of top coins that clients are interested in today, whether that's coins that they're interested in, they read about on the internet, or it's coins that the government has just noted may be included in a strategic reserve one day. The majority of these coins would be available on either venue, which means you can either buy them newly in cash by wiring assets in, or we can discuss what it means to transfer assets in kind. So maybe they have accounts already. Your end clients have accounts at crypto.com, Robinhood, Gemini, Coinbase being a very popular one. You'd have the ability to lift those assets out of those accounts and bring them directly into an account that you'd be able to manage directly and have that under your purview.
So you mentioned a couple of times this concept of an in-kind exchange. I've heard of like-kind exchanges, specifically on the real estate side, where somebody's bought a real estate asset, holds it for 15 years, and then is able to flip it, and there's tax benefits for doing that kind of thing. Is this a similar sort of what is an in-kind exchange?
So an in-kind transfer in crypto terms means that you're moving assets in a way that's called on-chain. So these movements are recorded on a blockchain. And in the sense of what your clients would be working with, what you'd be managing as an advisor, it means that we could easily facilitate movement of crypto from one platform to another. And what's interesting about this is it's visible, it happens nearly instantaneously, and there are no tax implications with just a simple movement of assets on chain. We could talk about other things that, create taxable events such as selling, as you'd expect, but the simple movement, that on-chain transfer, so Coinbase to an Eaglebrook account where now the assets show up when the advisor logs in and sees what's available to manage, that does not create a taxable event.
Interesting. So since you're moving from one coin to another, it doesn't trigger a capital gains event.
To be clear, if you're moving a balance of Bitcoin from Coinbase and you're moving that Bitcoin from Coinbase to Eaglebrook.
Oh, I see.
That does not create a taxable event. However, if you moved Bitcoin to Eaglebrook and decided to trade from Bitcoin to Ethereum, that does imply that a sale took place, and that does create a taxable event.
Okay, got it. So it's more like you're moving the custodianship of that's exactly what's happening with. Okay, got it. And when I think of SMAs, one of the things I do think about is like the tax benefits and like tax loss harvesting. So is that something that's featured as in a crypto SMA as well?
Yes, and that happens to be one of the most popular reasons our phones are ringing right now, and that's why I'm excited to talk about them. When we think about the benefits of investing in crypto, if it's okay, I'd like to zoom out for a minute and explain what the broader universe of options looks like. I think when an advisor gets a question from their client about crypto, whether they want to try it out or they have some, what are my options? We see so many different ways that you can invest in crypto these days. And if I were new to it, I would personally find it overwhelming. So on one hand, you have these indirect methods for investment. ETFs would be a great example of this. You are investing in an asset in a wrapper where you're obviously just tracking the price of the underlying asset. And that's okay. ETFs are a great option. But in the event when you do want a little more flexibility, as you mentioned, certain tax optimization benefits, we look at the direct universe of what you're able to invest in. And what exists in this realm would be, maybe you've told your client to open up their own Coinbase account. You were uncomfortable touching crypto in the past. And if they wanted to own Bitcoin, hold it, know it was theirs, previously, that was one of the only ways you could instruct your clients to be able to do that. Fast forward to today, a lot of tech work has been done, a lot of investment has been made in having platforms like Eaglebrook. So now we have these SMAs. So in this direct investment realm, looking at SMAs, you are afforded the ability to invest directly, as I've mentioned over and over. And this does allow for that in-kind transferability, which you cannot do for these indirect investments. You can't move crypto in kind and invest in an ETF. That's not going to work. You have the ability to diversify in an SMA. So where we know on the indirect side in the ETF land, we've got Bitcoin and Ethereum ETFs. On the SMA side, as mentioned before, you'd have the ability to invest in a variety of other assets. You'd also have the ability to choose a third-party manager, which is compelling. And then third, and as you mentioned, most interesting, the ability to tax loss harvest. So there is no wash sale rule in crypto right now. There could be imminently. When there is, we have a strategy that will deploy that would involve the ability to trade similar assets for each other. But at the moment, our technology would allow for the automatic sale of assets that dip below a specified threshold for tax loss harvesting. So let's say the lowest we can offer is 10%, given volatility, certain sizes of accounts. When the price of Bitcoin dips below that 10% threshold on a tax lot by tax lot basis, our system would automatically sell that asset and then automatically repurchase it within 60 seconds, being able to harvest those losses.
Is there a specific investment level where it makes sense, to think about indirect versus direct? Like, is there like an average size or average kind of client where like the SMA solution is clearly what they should be doing versus like maybe dabbling in some of these indirect options?
That's a great question. For the advisor who's walking through this and they're trying to understand in what case would they use either, first consider the technology you have access to. If you have hundreds of clients and you're on the Fidelity platform and maybe you're looking at dabbling, they want low minimums and they want to be able to put just smaller amounts to test things out. I think that's great for the ETF. You've got the ETFs at your fingertips already. You can try things out with a few $1,000s, see how it goes. You may also have the ease of investing into crypto in your IRA or in your clients' IRAs, where an ETF makes that really easy as well. I think there are many reasons that the ETF is great. But when it comes to SMAs, maybe you have a client who wants to start off with a larger amount. Maybe they're looking at a much longer term horizon and how they want to invest in the asset. And you do want that flexibility. I think it starts to come down to personal preference first and foremost, and then what type of functionality you're looking to be involved in that would allow you to invest in either. So in terms of amounts, for an SMA, I'd say look at anything north of 10K, look at the SMA. Anything south of that, look at the ETF. And for the client that really just wants to dabble, they don't really care about the ins and outs of crypto. They don't care about diversifying beyond what's available in ETF form. The ETFs are great. But for anybody who wants to go a little bit further, I think the SMA is something that requires some thought.
And I think in thinking about, portfolio allocation, I mean, obviously it's always an investor by investor basis, like what somebody, and it's got to be aligned with their goals. It's got to be aligned with all sorts of other things. But, just like on a grander scale, what kind of like allocation ranges do you see when people are looking at crypto? Is there like a, with like maybe start from the basis of like the standard 60-40, that's been the, whatever for years, just the idea of the 60-40 portfolio. Now people are talking about like adding alts maybe to the mix to change that number. Where does crypto kind of fit? Is there a number or a range that you often are talking about?
Yeah, this is such an interesting question because a large number of our conversations are with RIAs. Mm-hmm. And we all know how differently from RIA to RIA CIOs are able to manage their clients' portfolios or, an investment mandate for the rest of the firm. So on one hand, we hear that there's a requirement to massage the asset allocation framework and understand where crypto fits. And that's a little more difficult when things are so extremely rigid. And to highlight from your last question, I think when things are extremely rigid, that is when we see a lot of folks look to the ETF because it fits within more of that rigid framework.
Mhm.
When folks dig in a little deeper and they become a little more educated on the space, many have realized that there is no square box that this necessarily fits into at the moment. We do hear many large RIAs look to the alts allocation and where to carve a space out for crypto. And to me, that makes a ton of sense. Again, it's all about personal preference and team and clients, but we hear that often. And they're able to consider crypto in a light that they'd consider direct investment in gold. Sometimes it just goes in the just because bucket. It goes in the bucket of, I know that I want to be able to invest in this and I just need a method for being able to do so. So we've seen teams become more comfortable creating space for this. And when they do that, the average allocation we've seen ranges from 1% to 5% of a client's portfolio. In special cases, if the client happened to become wealthy because of crypto, obviously we've seen that percentage range much higher, but that would be on a one-off basis, of course. So as comfort has been gained, again, I think it most popularly fits into the 1% to 5% range. And we'll continue to see what happens. I'm excited to see how this evolves on that front.
So on that like last example of somebody said, did go in on crypto and has a big allocation to it, is there like a way to kind of manage out of a concentrated position through some of what, like how do you handle something like that if somebody like wants to maybe diversify, and what's the most efficient way to do that?
It depends, I think, on how they want to diversify. If we're talking about diversifying into within crypto,
Mm-hmm.
which is where a platform like Eaglebrook could be helpful. Let's say that client invested and maintained an account on Coinbase. They had, they started with $1 million, now they have $10 million, and the advisor is sharing with the client that perhaps we need to offload some of this weight, make sure we were diversifying more broadly. Outright certain assets is sometimes unavoidable, but I do think it's worth considering keeping some of it in crypto. So maybe if their investment was in 100% Bitcoin, taking a look at how to offload Bitcoin and into other assets the client might be interested in would be an opportunity to explore that in-kind transfer we talked about. Bring the assets onto a platform like Eaglebrook, develop a custom model that you'd feel comfortable massaging for your client, and sell out of Bitcoin and purchase into other assets. But you can be more creative with it. You can be more catering to the client who wants to explore movement into Solana or XRP or other assets. I will add that hasn't been a popular choice thus far. I think many are very interested in keeping Bitcoin positions or Ethereum positions, which tends to be the majority of crypto investors to date when they are working with their financial advisor. So we're seeing more of that. But when we do see it, we do have a few conversations a week around the concept of diversifying within crypto, and that would be the path that an advisor would be able to take here.
So what are some of the, I think crypto's got, there's a lot of concerns about it, right? I mean, there's like the volatility, there's just that it's still a newer asset. Some people don't trust it. So how do you deal with how do you address some of the concerns or dispel some of the myths that people may have when they're looking at this asset?
Yeah, I mean, look, when people have been nervous about this asset class, it's not for no reason. This space has been historically riddled with bad actors, and we all felt the brunt of that in, let's say in the past 4 years when we consider the events of FTX and how that unfolded on the industry. That did a lot of damage to investors' confidence in the space, and it has taken, let's say, 2 years for folks to come back out and understand that the space isn't going away, Bitcoin's not going away, and with every large security event or large event that takes place that would remove investor confidence in that way, there's an opportunity for the space to dig in and be more regulated, be more compliant, understand what it means to rebuild confidence and help investors feel like their assets are being kept safe. Because if we can't do that in this industry, then you shouldn't be participating at all. And I want to say I feel the industry has done a fantastic job of that, and they've put a lot of resources. I've been doing a lot of building and built a lot of strong partnerships to ensure that each step forward is one in the right direction in terms of what security means for investors. So when I think about myths, it's sure, there are a ton, right? People think I've already missed the boat. This is too crazy. I'm not going to touch it. All to say, I think that as each year goes by, it does become a safer space. People don't have to be as afraid. A lot of platforms are doing hard work to make sure we're acting in compliance, whether that's in being regulated by the SEC or working with other regulated platforms. The security myths, they're not all myths, right? I think that it just requires advisors, especially, to be extremely prudent when they consider what platforms they want to work with. So use all of your regular checkboxes. Are they regulated? Let's ask as many questions as we possibly can about how they keep assets safe, what they do with client assets once they're on the platform. Are they being rehypothecated? Are they remaining in segregated accounts? Obviously, within Eaglebrook, that would be the case. No assets leave these wallets once they are deposited unless the client instructs each platform to do so. So I'd say that number one, just do a lot of hard work in understanding which platforms you're working with. Two, to the point I made about, myths, I think I'm already too late. That's so not the case. It's still so early in this space that everybody has seen, we're still only seeing the US government scratch the surface on how they want to be, using crypto, or how they want it to be considered as part of a strategic reserve. We're seeing large banks start to be involved in a much deeper way, in a way that they would consider offering retail products to their customers or to their investors. And because smaller platforms still exist, and when you think about where crypto is being custody, such as places like Gemini and Anchorage, Fidelity obviously has custody services. BNY Mellon is building custody services. But when it's not so widespread, knowing that it takes a couple of years to build this type of technology in a way where it remains secure and it can be trusted going forward, that's how you really know we are so early. So what's really cool is these platforms do exist. You have a Gemini, you have Coinbase, you have Anchorage, you have a tech platform like Eaglebrook that was built with and for financial advisors. So you have the opportunity to still start now, whether on the direct basis or through the indirect basis, like an ETF, and you still have the ability to capture the upside for your client, which is so exciting. Sorry, long answer, but going back to your point about myths, that would be the biggest one that I feel needs to be dispelled. So really excited for everyone to continue to dig in and make the jump into the space.
And how correlated is Bitcoin with other assets? I think is one of the, or sorry, not Bitcoin, just crypto in general. Like there's the idea of like one of the benefits could be that it's, diversifies you from some what's happening in the other parts of the portfolio over time. How has that borne out in terms of like just that specific aspect of things?
That's an interesting question. First and foremost, we all know that cryptocurrency is extremely volatile. And what guides a price of cryptocurrency, it does tend to lean heavily on headlines, and movement of prices will react to security events, to announcements by the US government, announcements of large companies moving into the space. And for that reason, I'd say that they've become somewhat correlated to equities over time, especially after accounting for the volatility factor. And when you zoom out, the more you start to learn about what affects cryptocurrency prices versus what affects equity prices, I'd say that you can start to think about them similarly. So say there's a coin your client really likes and they're asking you about it, and you're wondering if this is something you should consider long-term. The first thing you do is you look at the team, you look at the projects that are being built, either on that protocol, on that layer, whatever type of coin it is, and you start to understand if the ecosystem is being built correctly and in a fair way for investors around the notion of that coin. What does the community look like online? What does the community of developers look like? So if you start to categorize it in a way where you understand what's being built and how sound that the protocol or the coin might be, you can start to think about it similar to equities. That obviously does not imply correlation. I just wanted to point out that some people have mentioned, a lot of advisors have mentioned, I don't really know how to value these. I don't understand how to think about this. So I'd point out that that's one way to do that. Other investors consider Bitcoin like gold. Again, doesn't necessarily mean they're correlated, but I do think being safe haven assets, as Bitcoin has grown to, to be considered, when we think about building a portfolio, we've seen Bitcoin be placed in a portfolio in that manner, and that's been interesting. So in times of volatility, obviously it's something to keep an eye on, and remember that holding it long term is where we've seen the most success when we consider advisors who have been able to make the plunge and get their clients invested.
So I think you've also talked about a couple times, we are under an administration that has signaled that it's more friendly to crypto. I don't know the best way to term it, or open to crypto. There's this notion of the crypto strategic reserve. There's the regulators who have some that have been brought in that have some experience for crypto. What do you make of just this overall regulatory environment and what it means for getting into the market at this point?
I think it's an extremely positive sign. And I think the entire industry has taken it for that, we're coming from an administration that was previously anti-crypto. It was difficult to come ahead as a leader in the space globally, given the types of regulations that were in play, or the type of considerations that were or were not being made when it came to certain platforms and what they were trying to build, or certain coins that were, working on creating availability, working with their community, or developers that were working on certain protocols and what that would mean going forward for them. It was stifling. As this new administration has announced interest in crypto and belief in it, on one hand, we've seen a few things take place that were more hype oriented. And, I think that there are some pretty binary opinions on things like the Trump coin and, other activity. I remain pretty neutral on that front, but I'll say it should be taken as clear intent that they want to do good work in the space. They want to make the United States a place where we can be a leader in this type of industry and be able to invest in really good technology. Good technology means safe technology in a lot of cases, and we want to be able to support the types of platforms that will allow sound investment in the space. So there's a lot to look forward to in that regard. And when it comes to the strategic reserve, what's interesting is the recent announcement for a broader landscape of coins that they would think to include in that reserve. So when I see XRP and Solana and Cardano being announced on that list, it's interesting. It gives me pause. On one hand, my personal opinion would be that we should still only consider Bitcoin at this time. There is more of a, air quotes, track record associated with it. And in terms of technology and what it's proven to do, it certainly has a place in a reserve. The others, I think, warrant further consideration. I think that's something for everyone to think about. But whether that ends up actually being the case, if they move forward with these additional coins, we should all take this as an extremely positive sign that they are interested in bolstering support, that the space will continue to see path forward in building responsibly, and knowing that there's space to be creative, there's space for us to still be a leader here. And that's something that I am really looking forward to.
Well, I've taken a good chunk of your time here, so probably should wrap up, but I just wanted to give you a chance for, if there's anything that you really wanted to underscore for the audience, or takeaways, or anything that I didn't ask you about, just give you a chance for a last word.
Of course, and I really appreciate it. I would just like to remind advisors that this is still early. You still have time to look at the best way for your client to have access to the crypto landscape. And when you're thinking about doing this and you're thinking about indirect versus direct investment, consider on the direct side that you have the ability to bring in-kind transfers under your purview so you can manage your clients' portfolios holistically. Bringing these assets under your purview means you're able to build on your practice, which I think is really exciting. You can diversify, and let's not forget that you can work through tax optimization and holding these directly as well. So hoping to work with anyone who's been able to listen in today, and really excited about what the future brings here.
And if folks want more information or to find you or anything, how can people find Eaglebrook? Where should people go?
If you would like to speak with a member of our team, you could certainly reach out to me. just K Mirabella at Eaglebrook Advisors, plural.com. You can go on our website and request a demo. It's eaglebrook.com. Certainly a member of our team would reach out to you and schedule time to speak. So please do.
Okay. So David, if people want to get in touch with you, how do they go about doing that?
You could also, probably the best way to find me is through LinkedIn, as well as, of course, coming to wealthmanagement.com and in our investment section. That's where this podcast gets posted, as well as all of our ongoing coverage of investment trends catered to the financial advisor audience.
All right. Well, thank you to you both. And thank you for listening today. Please like, follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.